Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast partners, Massar and Tim Stenovec. We welcome in our audiences across Bloomberg Television, Radio, and YouTube to parse the moments of the day. And Carol, look, we came out of last week, had something like the biggest jump in commodity prices that we saw, at least on a weekly basis, on record. And then we started out this Sunday night, if you will, watching that dramatic move higher in oil prices. And that seems to have really unnerved this market.
Yeah, absolutely. I mean, just see it in terms of the equity trade in general. Like, we have just stayed down all day for the most part. And if you're looking for where investors are hiding, it is those energy names, because we understand the jump that we've seen there, and utilities as well. It is truly, truly a risk-off day today, Tim.
Yeah, the S&P 500 is now down more than 12% from its January highs. We last saw these levels in June of 2021. Caroline, it's an uglier picture for the NASDAQ 100, down close to 20% since those November highs, levels last seen in May of 2021.
These are big moves, but if we put it in context, the NASDAQ off by 3.5%. We saw it down by 3.75% back on February 3rd. So we're sort of seeing this volatility time and time again, and unlikely to dissipate anytime soon.
And I think what's interesting, when you take a look at yields, you guys have been talking about how a two-year yield, you're back up to a 154, 155. Remember, the peak Romaine was about a 160 on the two-year yield. So you're almost back to where we were before this crisis unfolded, as you're thinking about those inflation expectations.
And I think it's interesting that those yields are moving higher. So people are still betting on the idea that the Fed stays the course.
And for longer.
Yeah. All right, we are getting the closing bells here in New York. Let's walk you through this right now here. Down day pretty much across the board here. The Dow Jones Industrial Average going to finish the day down about 800 points, or about 2.4% here. A pretty dramatic drawdown that we're seeing right now in the S&P 500, down 128 points, or about 3% here on the day. That's going to basically be put it back into correction territory, down about 10%, or about 12% from that all-time high. The Russell 2000 down about 49.50 points, or about 2.5%. All right, let's take a look at the NASDAQ here, and we just have to double-check the data here. But the NASDAQ is going to finish the day down by about 3.6% on the composite, 3.75% on the 100. That is basically bear market territory. Again, I know these kind of definitions get a little squishy, but we are down basically an even 20% here from that all-time high on the NASDAQ.
Yeah, and just a quick check on the volatility index, the VIX. I mean, no surprise to see it up about 4 points here, 35 and 35.9, so almost 36 there, Taylor. I mean, we get it. There's a lot of volatility in the markets, and that's certainly illustrated by the VIX.
You know, and Carol, I think you pointed out a good point earlier, that when you take a look at the individual sectors, and for our radio audience, we do this, the gainers and the losers, it really has been energy and utilities that are carrying this. Let me remind you, energy is up 36% for the year. It's not even mid-March. You're up an additional 1.2% when you think about this second level of those S&P 500 sectors. Utility also a big leader, up about 1.3%. Everything else for the radio audience in the red. So a lot of red, even in some of the best performers on the day. I bring you down here some of the worst performers. And again, it is a lot of red on the screen, and it is classic risk off. It's autos, it's banks, it's semiconductors, it's some of the durables and those technology sectors that are off even as much as 7%, Carol.
Yeah, and not so easy to find gainers today. If I look at the S&P 500, 437 names lower, 68 higher. So among them, and a big one, Bed Bath & Beyond. Man, that stock was up 34%, up almost $6, $21.71 at the close. Biggest gain in, I think, about 30 years. We know what happened. Ryan Cohen's investment firm, RC Ventures, disclosing a 9.8% stake in the company and asking for them to consider a sale of the company. So we're talking about a special situation, and that explains it. Costco was up as much as almost 4% here, ending the day with a gain of about 0.6% here. Deutsche Bank raising its price target to $4.91 a share from $4.82, maintaining its hold rating on the company. $5.28 and change was the close. And McCormick, Spice Company, this stock was up almost 4% early in the session. Tim kind of pointing it out to me. And this stock has had quite a run over the last 4 or 5 days here. I think it's up around 10%, maybe a little bit less that because of the pullback. But a recent fourth quarter beat and 2022 forecast. Just looking for the kind of names that investors are moving into.
Well, and just to point out, too, on the S&P 500, of the 15 gainers, the biggest gainers in the S&P 500,
energy?
14 of them are either energy or commodity-related stocks.
Yeah, exactly. I mean, right? It's very clear in terms of where investors were going here. Everything else was really off. They stayed off of it.
Well, investors certainly stayed away from airlines. We told you a little bit about that earlier. The second worst performer on a percentage basis, United Air in the S&P 500 today, United Airlines down 15%, hitting a 52-week low today. Of course, concerns remain with rising jet fuel prices, but it's also what rising commodity prices, rising costs mean for consumer spending. Are they going to be going out, and what this actually means for the economy? So we saw airlines as a whole down today.
I think that's interesting. I mean, I know we say the 52-week low.
Yeah.
This is still the lowest since the summer of 2020. And I think that's critical because you talk about that big run-up that we saw kind of late summer, early fall 2020, where a lot of people started to make a bet on a return to travel. And that's been all unwound right now.
Right. If we're going back to those levels when the economy was so largely shut down, to think about that's where we are today on a lot of individual names, that's a big deal, Tim.
Ralph Lauren also taking a hit today, down more than 12.2%. Another 52-week low right here. Romaine, you talked about PVH a little earlier, another retailer that was downgraded by Wedbush that moved lower.
Right?
Yeah, exactly. Ralph Lauren, overexposure to Europe. Ralph Lauren gets about 26.5% of its revenue coming from Europe. That was in fiscal year 2021. And then also Uber. This is really interesting. Finishing the day down by 4.2%. It started higher. It jumped as much as 7% earlier in the day after the company raised its forecast for the current quarter. It's almost back in terms of ridership to pre-pandemic levels, so sort of defying Omicron, raising its guidance. But even that much good news couldn't help on a day like today. Shares finishing lower.
And Tim, maybe the drivers over at Uber are going to be tackling one thing in particular, higher gasoline prices. Gasoline futures, for our radio audience, up 9%. We're at a record high for futures. That doesn't mean it's record at the pumps at this moment, but what with Romaine tweeting out pictures of what it looks like to fill your gas over in New York at the moment. He's seeing a $6 handle on some things. That's remarkable. So we are seeing gas oil up 9%, Brent crude to that end, also seeing a record move on the day. $140 is where we were at one point earlier trading. As we've said time and time again, we've settled at 123 or thereabouts, but these sorts of record moves, this volatility, it unnerves the market. When you're seeing WTI crude 3.8% higher at 120, and indeed the pressure you see wheat near an all-time high. We're seeing, of course, nickel jumping 90% at one point in today's trade. Inflation is front and center, and that is why you see the dollar as basically your only outperformer when you're looking at G10. It was higher against every single pair today when you look at WCRS on the Bloomberg function. Bloomberg dollar index up 0.8%. What will the Federal Reserve do? This is the dollar smile in action. When the rest of the world starts to crumple, you go into the US dollar. You don't even go into the Swiss franc as they try to jawbone down the strength of the Swiss franc at the moment as a haven trade. And instead, down we go in the British pound, off by 0.9%. And indeed, at one point, we're seeing the euro hit parity with the Swiss franc. Could it be next parity with the US dollar, Taylor?
You really see this flight to quality. Caroline, you certainly perhaps maybe didn't see that in yield so much. The narrative has changed where it's sort of risk off, except that inflation is climbing, and it's climbing perhaps maybe longer and more persistent than we all thought. That is the reason that you're up 7 basis points on the day to a 154 on the 2-year. Remember, the peak just a few weeks ago was about a 160. The 10-year yield nowhere near the peaks, but we're approaching a 179. Still haven't regained some of the 2% levels. But Carol, I think what was interesting is we had Matt Toms of Voya Investment Management on earlier say this doesn't mean the Fed moves faster. They'll still maybe only do 25, but they'll just go longer than we thought. So instead of a 2, maybe look at maybe a 2.5%.
Did you look at the real yield today? On the 10-year real yield?
No.
Taylor?
The one day that I don't do it, what happened?
John Orthus did,
It is back down to -1 again.
And is that slowing growth on the horizon, Carol? Something else maybe that the Federal Reserve might need to contend with?
Look at how quickly the conversation has changed. Our Markets Live blog has really covered this, that because of the Ukraine war and what we're seeing in terms of energy spikes and concerns about supply chains and concerns about inflation increasing, like we are now talking about recession. And at this point, we need to figure out what does that mean for growth and how does that change the dynamics and what the Fed does ultimately, Tim?
Yeah, how much higher does energy go? How much higher does oil go? We just had Jave Hatfield on from ICAP, Infrastructure Capital Advisors, who says that he sees oil going to $150 a barrel with the restrictions that are being placed on Russia.
And what time point does that crunch demand?
Demand
At what point do you start to, already we're seeing that that's basically the level we're already hitting, of course. We had earlier on today Dan Pickering Energy Partners, you know him well for Tudor and the like. He was really saying you're seeing that already. When Romaine, how many retweets did he get over the weekend for that picture of $6 oil?
$6. And look, it's Manhattan, and so a lot of people dismiss it.
California has an 8 handle.
But I go by that gas station all the time. It was like $4, just like 3 weeks ago.
It was also full serve, Romaine, right?
Yeah.
Did people point that out too?
It doesn't matter. It's
Okay.
higher.
I'm just kidding.
It's called rate of change, and the fact is that change has gone up. And if you filled up your tank one day and it was $40, and you fill it up 2 weeks later and it's $50, you notice.
We haven't actually seen and felt the input too of these higher energy prices at the pump. And the other thing, it's a throughput.
How much does it cost to fill up your boat, Carol? Has that gone up yet?
We haven't filled it. It's still winter.
Oh.
Okay. She's just using air, sails.
We do. We actually use wind power.
Wind power. There you go.
She's EV all over them.
The embodiment of ESG.
All right. We got to run. We will see you same time, same place. Our cross-platform coverage on radio, TV, and YouTube. We'll see you again tomorrow.